Good morning. It's a few minutes past 7 on a Sunday morning, and this is actually the first time I'm running on a Sunday, but it's because I've come to realize that every time I take the weekend off due to weekend shenanigans, it's really hard for me to get back to a fixed running routine. So today I'm just going with the routine. So today I'm just sticking with my routine whereby I run one day, take a rest, the next day, and then go for a run the following day. So yesterday I didn't go for a run, so today I have to show up. And today I'll also be doing a weekly market forecast for the coming week, and I'll be also be breaking down a GBPUSD trade that I took this past week. So let me finish the run and then I'll join you in the charts. So as I said in my previous video, I prefer to go for a run at 7 in the morning. So today is the optimal time because the rains have also slowed down as we are approaching August, because today is July the 27th, I think, or the 28th. So now I'm back to running at 7 in the morning. Now the thing about going for a run is just pacing yourself. You don't need to try and run at an athlete's pace. Just go at your own pace, a slow jog, as long as you get in the movement and you do the kilometers or miles that you have set for yourself. Now for me, I usually do 4.3 kilometers, and it's a set route that I usually do because once you set your mind to a certain route and a certain kilometer target, it's easier for you to complete the run compared to when you just wing it. So if you want to start to run, just figure out the amount of kilometers you want to do. Just stick to it. Then you might start to increase slowly, because as for me, after the next 3 weeks, I'm going to increase the distance to about 7 kilometers. And then after that, after another 1 month, I'm going to increase to 10 kilometers. It's just about slow, continuous growth. Now the thing about running in the countryside is the fresh air and the environment. Like you can see all around me, like just trees. There's nobody on the roads, no cars. This gives you the perfect environment to enjoy the run. I'm now done with the run. Today I did around 4.9 kilometers. I added about 600 meters to my normal run. So right now I'm just going to prepare, go to church, and then when I come back, I'll join you in the charts, give you my weekly market forecast and my breakdown for my GBPUSD trade. Alright, okay, thanks for joining me in the charts. Right now I just want to break down the GBPUSD trade that I took this past week, and I'll also give you my weekly market forecast for this coming week. Now, it's been a while since I took a trade, and that's a challenge when it comes to swing trading, because you have to be patient and wait for the right setups. And sometimes you might wait for the right setup and the trade ends up being a loss, like it happened in this case. So without further ado, let me just break down the GBP USD trade. Now this is a trade that I took on the 24th of July, which was on Thursday. at 1300 hours, which was 1 p.m. And this is based on London time. I usually set up my time settings to the London time. Now, with this particular currency trade, since it was a USD denominated pair, the first thing that I usually look for is I look at the price action on the DXY, which is the dollar index. And the dollar index will definitely determine what I'm going to be doing on the dollar related pairs. Now, for this particular instance, you can see that the dollar had been on a sell off from the 17th of July. You can see here this sort of price action, and this is how trends usually move with lower lows and lower highs. Like every time you're just getting lower lows, lower highs. And on Thursday during the Asian session, and when I was waking up in the morning, I was looking for an opportunity to see if we could get some strength on the dollar index so that I can look for opportunities on dollar denominated pairs. Because for me, in this instance, in case the dollar has been selling off for quite a while, I'm looking for an instance where we can get a reversal so that I can look for buy entries on dollar denominated pairs. But for in this instance, because it is GBPUSD, since I'm looking to for strength on the dollar, I was looking to short GBPUSD when the market was opening on Thursday. So as you can see, the price action on GBPUSD is inversely proportional to the price action on the Euro USD. Whereas we had a sell-off in the dollar index, on the GBPUSD, you had the alternative, you had this uptrending market for a while. And for this particular instance, we had this first initial leg, the correction, the second leg, correction, the third leg, a small correction, and then we had this final leg, which was just an extension. And you could see this from the size of the candles, which are very small, and then you also have wicks in the candles. So this was a sign for me that the uptrend was about to end, and I was now waiting to see if we could get a reversal in price. And on Thursday in the London at the start of the London session, we started with with a strong sell-off with three strong candles. And at this point, I was now looking for opportunities to short the market. Now, I won't go into the exact entry criteria for my trading strategy, but I think that you can see from this illustration that I'm usually looking to sell high and buy when the price is low. That's the principle for me when it comes to taking trades in the market, because in that when you buy when the market is low, you have a chance for your trade to run and give you a better risk to reward compared to when you buy when the market has already trended for a while. When you're buying in such areas, for example, when the market has trended like this and you buy at this area, it just means that you have very little room for your trade to continue pushing upwards. And for me, the most important thing, especially as a swing trader, is risk to reward, because you're not going to be taking trades all the time. So when you get a trade, it's very important for you that that trade has a lot of space to move. So in this instance, I took the trade on the at the close of this candle, which was at the start of the New York session. Now I got filled at, let me just check. I got filled at 1.35334, and my stop was at 1.35534. Now, unfortunately for me, this was a loss because the price, we got a retrace in price, and I was tagged out. And as you can see, I was just tagged out with this candle with a wick before price continued to push downwards. Now, this is very unfortunate, and if you're not experienced enough, you'll end up being emotionally disturbed. But this is the nature of the market. Sometimes the market just tags you out, and then it continues in the direction that you had anticipated. So this was quite unfortunate because this would have been a trade that would have been running at 5.48. And normally during such market conditions, where we have all these wars, and Trump coming up with all manner of policies, I do not hold my trades over the weekend. So I would have closed this trade at around because the market closed at this level. So I would have closed the trade at around a risk reward of 4, which would have been pretty impressive and would have been a good way to end the month. So this particular trade ended up being a negative 1% loss for me, and that is not really an issue because taking losses is part of trading. Like if you're not used to taking losses, then it's going to be really hard for you to trade the financial markets, because when you are doing the technical analysis, it does not mean that you know what is going to happen next. It's just a case of probabilities. And when you are doing this technical analysis, it is based on previous price action where we have seen certain patterns repeat themselves. So when you take a trade, you are anticipating that that pattern will repeat itself once again, but it does not necessarily have to happen that way. And that is why whenever I take a trade, I always have a stop loss and I minimize my risk to only 1% of my capital. So that if I take a loss, it won't mean that much because it's just 1% of my capital that I'm losing. Now, when you're trading on prop firms, it becomes psychologically challenging because every loss takes you closer to the maximum the maximum loss limit that they have. And that's why most of the time when you're trading prop firm, it messes with your trading psychology. So that's just something you need to be aware of. But in general, a 1% loss is really nothing in your personal account, because if you are taking a 1% loss, it means that you need to take 100 losses in a row for you to blow your account. And when you have proper risk management, you can never blow your account. And for me, as I've said, I'm looking for instances where I can get high risk to reward ratio on all the trades that I take. So in this instance, I was looking to sell when the market was high. And whenever I look to buy, I'm looking to buy when the market is low, when the market has traded lower for quite a while. So this just happened to be a loss. Now, what I'm going to do now is to give you guys my weekly market focus for this coming week. And the pairs I have for look and the pairs I have on watch this week are 4 pairs. I have the Euro USD, US 30, the NAS 100, and the JP 225. Now, when I look at the Euro USD, I'm still looking to short the Euro USD because I'm still expecting strong. I'm still expecting the dollar index to show us some strength this coming week, because although we had this short run up, this is not really strong momentum. I'm looking to see if this week maybe we can get some sort of correction to start the week, then the market to push higher on the DXY, which will make me to look for short positions on the Euro USD, because I'll be shorting the Euro USD because I can see the dollar might have a lot of strength. So on this particular pair, because what I'm seeing here right now shows me that the market might get into some sort of a consolidation before we get the sell off. So that is basically what I'm looking for in the Euro USD for this coming week. I'm looking for selling opportunities on the Euro USD, and also on the US 30. I'm also looking to short the US 30 because, as you can see here, we've had a market that has trended upwards for quite a while. We had this push, we had this correction, and then we've had a continuation of momentum. Now, with this particular pair, the market might continue to push upwards with one last leg before we can get some sort of uh, a distribution or an ascending channel. So what I mean is this: so this market might continue to push upwards. So this market might continue to push upwards, then we can get some sort of a consolidation or a distribution or an ascending channel before we can get the sell off. Now, this might take some time. It might not happen within the first few days of the week. So maybe we might get a setup on Wednesday, around there. But in case we do get the sell off earlier than expected, I'll still be looking to take trade, because at the end of the day, I'm reacting to what I'm seeing on the market. If I can see that we have more selling pressure than buying pressure, we have strong selling pressure in the market, then I'll definitely be looking to take sell entries. But the market might also just sell off and we might not get any entries, because just because we get the sell off, it does not mean that you'll get your setup, and you have to wait for your setup before you take a trade. There's no need to force trades. This game is about being patient and taking the high probability setups. So on the NAS 100, it's also the same. And on the NAS 100 and the US 30, the price tends to mirror itself. So on the NAS 100, I'll be looking to see if we can get selling pressure, strong selling pressure. Look for correction, then take the sell entry to the downside. On the JP225, I'm also looking for sales in the JP225, because, as I've said, I'm looking to buy when the market is low, and sell when the market is high. And when you look at this price action on JP225, we had this push, we had this correction, we had this very strong push, small correction, and then we've continued in momentum before we got some sort of reversal in price. Although the sell-off is not that strong, you can see that these candles in the sell-off are really small compared to these candles in the uptrend. So I'm looking to get similar strong candles, but in the opposite color. Like, I'm looking for strong selling pressure on the JP225. So if we get strong selling pressure, I'll be looking for my flag continuation entry to take short entries to the downside. So this week I'm basically looking for short entries on all my pairs, on all the pairs that are on my watch list. So we are going to wait and see how price is going to develop. If we get price pushing higher, I'll still wait to see if we can get the push to the upside before we get signs that the market might be slowing down, to look for sell entries. Now, the market might end up pushing higher, but that's okay. As I've said, this is not about being right. It's a game of probabilities. And so if the market pushes upwards, then I'll just sit out and wait for the next week to see if we could get the setups that I'm looking for. Now that's basically my market focus for the coming week. The way I trade is pretty simple, although it has taken me a lot of years to make it this simple, because I base all my analysis on the 1 hour chart. I do not look at the higher time frames. I'm looking more for cycles in the 1 hour time frame. And when you've looked at the charts for quite a while, and based on the Wyckoff's principle, um, markets move in cycles, where we get uptrends followed by a distribution, then we get a reversal in price, and we get a downtrend, which usually ends in an accumulation before the cycle starts again. Now, these cycles happens on all the time frames, and if you can just focus on one time frame, you can be able to take advantage of these cycles on that particular time frame without having to worry about what's happening on the higher time frames. Now that's basically my market focus for the coming week. Next week I'm going to do another weekly market focus, and we're going to see what will transpire in this coming week. See if we are going to get the sell-offs that I'm talking about, and if we are going to get any setups. So with that said, I really hope you guys got some value from this video, and I hope to see you in the next one.